Hi everyone, and welcome back to Smart Trader Talks, the podcast where trading makes sense. I'm Sarah, and today we've got something super exciting in store for you. We're diving deep into the fascinating world of trading symbols, like EUR/USD and GBP/JPY. Trust me, by the end of this episode, you'll have a solid grasp of currency pairs and how they work.
Oh wow, that sounds, super interesting. I mean, I've always heard about these pairs, but never really understood, what they actually mean.
Absolutely, it can be a bit confusing at first. So let's start from the very foundation. What exactly is a currency pair, right?
Yes, like what does that even mean?
A currency pair is a combination of two currencies. It's essentially how you compare them. You have the base currency and the quote currency. For example, in EUR/USD, the euro is the base currency, and the US dollar is the quote currency.
Oh, okay. So, like, when I see EUR/USD at 1.1000, what does that actually tell me?
Great question. When you see EUR/USD at 1.1000, that means 1 euro is worth 1.10 US dollars. So if it goes up to 1.1100, it indicates that the euro has strengthened against the dollar. It's a bit like watching two friends compete for resources. If one starts outperforming the other, you notice shifts, right?
That makes sense. So I'm, like, basically always comparing currencies?
Exactly. You're always betting on how one currency performs against another. Think of it as a constant dance, where one currency's movements affect the other.
That's such a cool way to think about it. So, are there different types of currency pairs? Like, how do they categorize them?
Yes, they're typically divided into three groups: majors, minors, and exotics.
So what are the majors?
Majors are essentially the most liquid currency pairs, and they usually include the US dollar. So for instance, EUR/USD or GBP/USD fall into this categories. They're widely traded, meaning there's a lot of market activity.
Got it. And, what about the minors?
Minors, on the other hand, don't involve the US dollar. Examples include EUR/GBP or AUD/NZD. They're definitely tradable, but they're a bit less popular among most traders.
Interesting. And then there are exotics? That sounds like it could be, wild.
Absolutely, that's a good way to put it. Exotics feature currencies from emerging economies, like USD/TRY or EUR/ZAR. They can be more volatile than majors and minors, and often come with higher spreads, which means there can be greater risk and opportunity.
So should I, like, stick to majors if I'm just starting out?
That's definitely a smart move. Majors generally have tighter spreads, and there's a plethora of analysis available to help you make informed decisions.
Oh, so it's like having training wheels when you're learning to ride a bike?
Exactly. It allows you to gain confidence and understand trading mechanics without getting overwhelmed.
Wow, this is starting to make a lot of sense, but how do I actually know which currency is rising?
That's where charts come in. You look at the chart for the specific pair you're interested in. If EUR/USD is trending upwards, that indicates the euro is gaining strength against the dollar, and vice versa if it's going down.
So to recap, every currency pair shows this relationship, and it's basically like a seesaw. One goes up while the other goes down?
Exactly. You're constantly trading one currency against another, just like balancing that seesaw.
This is so informative. Thanks, Sarah. And of course, thanks to everyone tuning in today.
You're welcome. Next time on Smart Trader Talks, we'll delve into the different types of orders, market, limit, stop, and discuss when to use them effectively. Until then, stay sharp and trade smart, everyone.